about the stock index, especially the US stock index. And you can notice certain traders are only focused on gold market, or they are only focused on certain things like the crude oil prices, crude oil markets, right? But sometimes it's better for you to understand more and more different types of products. So when certain fundamental events coming out, right, you're able to make a better trading decisions. For example, sometimes if the overall trends for the gold are very, very slow, and then you don't know how to trade and you don't know what to trade, then sometimes it's better for you to trying to explore for more different types of the asset classes. For example, the stock index is one thing that a lot of traders might still not quite familiar with it, but it's very, very easy for everyone to learn about what is the US stock index. Okay, so our major point that I want to show you or want to educate you guys is regarding on what is the US stock index, and then why should we trade the US stock index, or when is the good timing for us to focus on the US stock index compared to other asset classes. It's always very good for us to explore to more different types of asset to enhance our trading decisions in future. So this is a today highlight that we are going to covering on. So the first thing is very simple. What is the US stock index? We will provide you a simple definition. And then what is the advantages as well as the disadvantages of the US stock index? Then we will also updating about what factors that are affecting the US, the stock index, and then we will also teach you how can you make a calculations for it. Okay, so yeah, what is the US stock index? Very simple. Definitions from Google is a dynamic reflections of market performance. But right, just put it in the layman terms. So the US stock index is something, right, including most of the important stock market in the United States. So when you invest in the US stock index, right, it means that you are actually investing most of the very, very famous, very, very big company in the United States. So when you want to buy the stock index, you don't have to, if you certain people, right, if they don't understand what is the stock market or the shares, if they decide to open a financial statement on the company, everything should be very, very complicated for them. Like what is the profit and loss, and then what is the cost of goods sold, asset liabilities, these kind of things should be very, very confusing. And then you need to find what company is performing better than another. Is also another difficult thing for you to understand on it. That's why we do have, or the US is actually have the US stock index, that when you really confidence towards the US economy or the US equity market, you don't have to analyze and pick the best company by yourself. So you can just purchase the US stock index. It means that it already automatically pick the best company for everyone, for all the investors. So if you really think that US economy is very good, and then you are lazy to do some stock analysis because it's quite time consuming, then it's very good for you to consider the US stock index lah. Or certain traders are not sure, like for example, they don't know Apple performing better or Tesla is performing better, right? And then is Google better than Microsoft or not? Certain things that you are unable to make comparison. And then you really believe that US technology company, including Google, Microsoft, Apple, these company are very good, have a very good prospect, and then you lazy to pick, then US stock index is also one of the good considerations for you to focus. Because for example, when you invest in Nasdaq or the USA 100, it means that you already successfully invest in 100 companies in the United States, including all of the top performer like Google, Apple, Microsoft. So just one stone, you can take a lot of things. And then next, we are going to covering about the famous US stock index that we will be explaining today. So we do have three very, very famous US stock index. We do have including like Dow Jones, Nasdaq, and then S&P 500. So as I mentioned also just now, right, when you invest in the stock index, it means that you invest tons of the companies all together. So like for example, Dow Jones do have 30 companies. So when you click buy on the Dow Jones button, it means that you already successfully purchased 30 big company in the United States. Dow Jones already included for you. You don't have to pick what is the big company by yourself. According to Warren Buffett's statement, he have been mentioning also that if you are not familiar with the stock picking, you are new trader, new investor, the stock index is one thing that you can take into the considerations, because in a very, very long-term basis, right, the stock index performance are normally sometimes even better than those hedge fund performance after they deducting their management fee. So sometimes it's still advisable for you to consider US stock index instead of going to the hedge fund industry and then look for their service. Sometimes it will be like that, right? According to the Warren Buffett statement. But of course, this is a very, very long-term basis. He's trying to compare like 50 years of the stock index performance with hedge fund performance. So this is the benefit of the US stock index. You don't need skill. You can just, if you really believe US equity market is good, then US stock index is one of the good considerations. Now, I'm going to talk about the 3 famous US stock index for you guys, and then it will teach you what is the difference between all of them. First thing is Dow Jones. So Dow Jones, right, is what we can consider like the biggest 30 company in the United States. They were trying to calculate the size of the company. They were trying to calculate the price for the company. The higher price of the company will include the top 30 company that have the higher price will included into the Dow Jones. So when the stock price are very, very high, right? What does it mean? It means that a lot of investors really confident towards that. So to put in the more simple way is when you purchase Dow Jones, it means that you purchase the a lot of investor favor stock, like a lot of confidence to it. That's why the share price are very, very high. So when you purchase Dow Jones, it means you already purchased 30 top performer or top favorable investment products from the global investor, 30 companies only. So the company included Apple, Microsoft, and Boeing. Okay. And then we do have a lot of different types of segment sector like JP Morgan, banking sector, oil sector, all included in the Dow Jones. For example, you're not familiar like in next month, what sector is good? Is the bank sector is good? Is the property good? Or if the oil and gas company is good because oil price might be considered recovering in future. What is the good sector that you can focus on it? If you have no idea, you don't understand anything about the sector thing, then Dow Jones is one of the good considerations. When you consider to invest in Dow Jones, right, it means that you already successfully enter different types of sector including technology, banking sector, consumer discretionary sector, oil and gas sector. Yeah, so this is the things that you can focus on it. You don't have to learn sector one by one. You don't have to predict next quarter what sector is good. You don't have to. If you really believe that US economy will perform very, very good, then this is the time for you to consider the US equity market also, because good performing in economy will likely to cause investor or the consumer to buy more things, right? And then stock market will link to what? Link to business profit. Higher business profit will lead to a lot of people buying that stock. So when a lot of people become richer and richer, consumer spending become higher, then of course the company's earnings will become very, very good. So when their financial result released, right, it will likely to push up the stock prices. Right? Later, I will show you the example of the Dow Jones Nasdaq, because you can notice recently, right, especially for Dow Jones and Nasdaq, they're trying to reach all-time high. So there are certain fundamentals that causing this kind of index increase aggressively that I will be also expanding one by one. Okay, so now you get a brief understanding about the Dow Jones, 30 big company in the United States, including different sector. Next thing is Nasdaq. Nasdaq is slightly different because as comparison, right, Dow Jones, we only have 30 company, but Nasdaq, we do have 100 company in the United States. So this 100 company, right, most of the companies are technology sector. So if you love more diversification things, right, it's better for you to focus on Dow Jones. But if you really confident towards the US technology sector, including the AI development, including the business for the cloud computing, then Nasdaq should be one of the consideration that you can focus on it, because in Nasdaq, that included mostly high technology company or high growth company. So when the US growth very, very fast, right, then Nasdaq should be the one who benefit from it compared to Dow Jones. When compared to the risk, right, Nasdaq should have a higher risk, but return is quite okay. Why Nasdaq have higher risk is because of Nasdaq mostly focus on the technology sector. But compared to Dow Jones, right, Dow Jones have different types of the sector. So when you don't know what sector is good, you can consider invest in Dow Jones. When you think technology sector is the best, then Nasdaq is one of your considerations. So I hope I give you an understanding, like differentiates the difference between them. Then the next thing is the S&P 500. S&P 500 is the most simple thing that compared to others, because S&P 500, it just included 500 large US company, 500 company. So for example, when you invest in the S&P 500, you will directly invest in mostly mostly all of the companies in the United States already. So they were trying to track the S&P 500 movement. Then they were trying to like, if all of the company performing very well, then S&P 500 should be increased. So when you invest in S&P 500, it has more diversification because you are investing in 500 different company. Then they have a different sector, no matter big company, small company, all included inside. So yeah, if you don't like risk, then S&P 500 is one of the good considerations lah. But if you really think technology is good, then Nasdaq is good. If you think that you only want to focus on big company, you want to ignore all those small company, then you can consider Dow Jones. So after you get a brief understanding on these three US major stock index, right? Next thing we are going to explain about what is the advantages when you invest in the US stock index. What is the benefit on it? Why you want to invest on it? Okay, so the first thing is the broad market exposure. As comparison with if you only focus on one product, right? For example, you want to invest in one company, it will be very difficult for you to forecast because you don't know this company whether it's going to performing well or not if you don't have a very good skill in interpreting their financial result. So if you're lazy or you don't want to spend too much time on analyzing company, then one thing, stock index is one of the good considerations because it just needs your confidence towards the US economy. If you think the economy is good, then of course the stock index will be very, very good. But of course, vice versa, if you think that the US economy is going to crash very, very soon due to high inflation or slow economic growth, then this is the time for you to short selling the US stock index. So yeah, it's a very good for you to have a broad market exposure. It's not just like affecting by one company, but tons of the company. So you don't have to worry that you just buy one company, then the company not performing well, your capital reduce a lot. No, you don't have to worry about it. Then the next benefit is diversification. As you mentioned, diversification is one of the crucial things for the investor to focus. Of course, for those who only focus on the gold market, sometimes it might be good, but sometimes if the gold do not have any significant movement, then you might be quite losses. You don't know what to trade, and then you feel like you must trade it, then you open the positions randomly for the gold market. It's something not recommended for everyone. So it's better for us to have a greater exposure. That's why you can able to have a good diversification thing. And then better exposure means that when you can continue to monitoring different asset classes movement, when you really think that, okay, now gold are very slow, but if you look at the stock index, US stock index charts, then it's very, very good. So you can try to shift your mind. It's not just 100% focused on the gold. You can try to shift your portfolio towards others product. It's good. Diversification is what we call it. And then, of course, when you invest in stock index, it's very low cost and time saving lah. Compared to you want to invest in the one stock company, you need to analyze this company one by one. It will be very, very time consuming. What is the disadvantages? Of course, the US stock index, their movement, they will likely to experience certain volatilities. This is a must because equity market is is the asset classes that normally have higher risk compared to other asset classes like fixed income. For example, if you buy government bond or you save money in the bank, your risk will be of course lower, right? So yeah, as comparison with stock US equity index compared to other fixed income asset, of course, US equity index should have higher risk. Then when certain time market float with a very, very high volatilities, high risk things, for example, rising geopolitical tensions. Another example, there is a war out there. This is the thing that will normally cause the US equity market to drop or the equity market drop. Or another example, big example in 2024, which is what we call the US elections. So this is also the things that will be likely to cause the stock prices to crash. So yeah, market volatilities is one thing that you will be facing if you want to focus on the US equity index. And then limited potential for outperformance. Like this is also one true thing because, for example, as comparison, if you only invest in US stock index and compared to you invest in individual stock, sometimes the individual stock movement, of course, will be get higher compared to the stock index. Sometimes, right, certain individual stock will be likely to suddenly increase 10% one day. But this is the thing that not high chance there will be the US equity market is not going to experience like suddenly a 10% of the surging. No, normally it's just a US stock market is going to happen like that, but not the equity market. The company investment will be experienced suddenly 10%, 20% spike, but US equity index 5% is very good already. So the disadvantages for you to invest in stock index is it will limit your potential outperformance. If you really have a good taste and have a lot of time in stock investment, then you can consider individual stock, just purchase stock. Or if you really have a very good view on the gold market, then of course the gold movement might be even bigger compared to the US equity index. Okay. And then next thing is difficulties. Certain people might be still confusing because right, as comparison gold with stock index, right? Gold very simple. Sometimes the certain fundamental that can cause gold go up or go down is very simple and clear for us to understand on it. But US equity index are quite complicated, I would say, because there are tons of the things going to affect the US equity index, including the company performance, including the risk appetite in the market, including the company growth, the sector growth, this kind of thing should be the one of the difficulties for a lot of new trader that can focus on it. So yeah, so difficulties if you want to enter the US equity stock index. Next, I think I have already made it clear for the what is the advantages as well as the disadvantages for the stock index already, right? So next thing that we are going to cover, what is now is the biggest trend. I know recently, right, we do have tons of the factors that are going to affect the US equity index movement. For example, war or this company release a very good financial result or that company release a bad financial result. There are tons of the fundamentals that are going to affect to it. But the main thing and then the most important thing in 2024, the most important factor that are going to affect the US equity index is what is it? Is US Treasury yield or the interest rate decisions. So this is the most hottest topic that everyone are discussing in the 2024. If you look at the news, this kind of interest decision is going to affect the gold movement, is going to affect the dollar movement, but do you know it will also actually affect the US equity market aggressively? So let's look at the charts. So this is the Nasdaq charts. You can notice that overall trends for the Nasdaq since 2022 or 23, after the Federal Reserve considered to cut the interest rates or maintain a low interest rate, US equity market keep continuing to increase further. But of course, a good company performance is one of the factors that can benefit the Nasdaq, the US equity market. But the main push for the US equity market recently, right, in 2023, 2024, the main push is the interest rates. If you notice on the news, a lot of people saying that the Fed should be considered cutting the interest rates. That's why this is the main thing that caused the US equity market increase more. So I'm trying to let you guys understand why when the Fed decide to cut their interest rates, lower the interest rates, it will be benefiting the equity market or the stock index. It heard like quite confusing, but I will try to make it in a very, very simple explanation for you guys. So we need to understand on a few things. Interest rates will likely to link towards the borrowing cost as well as the economic stimulus. So when the Federal Reserve consider they want to lower down the interest rates, right? Low interest rate set by the central bank, what does it mean? It means that lower interest rate will likely to reduce the borrowing cost. So imagine you are the very, very high growth technology company. What is the most important thing? The most important thing is your growth, right? Most important thing is the growth. So how can you make your company grow more? Is by putting a lot of money in R&D, right? So how can you take the money? Is by borrowing from the bank. So when the interest rates are very, very low, the means that the borrowing costs are very, very low. A lot of people will likely to borrow money from the bank and then take those money to expand their business, to do all the R&D, to innovate a very, very good innovative products. So when low interest rate happen, means higher borrowing. This kind of borrowing is going to make the business become better and make a lot of expansions. So this will likely to benefit the US stock index one, because when every company easy to borrow money from the bank to expand their business, there will be chances for them to build a very good business, build a good business expansions. That's why a lot of investors will likely to have some confidence towards that. This is also one of the reasons why Nasdaq increased aggressively previously lah, because Nasdaq is including high growth company because it's technology sector ma. So high growth company including Google, Apple, this kind of big technology shares. So when they lower down the interest rate, it's very good for the Apple because they can try to borrow money in a very cheap cost to make a better Apple products for everyone. One of the example. Okay, so this is explanation. And then the next thing is the discount future cash flow is something quite complicated, but I will make it in a very simple way. So normally, Wall Street analysts, including the JP Morgan or the global analysts, how can they focus on the intrinsic value of the company? Normally, the intrinsic value, some of you might have before, some of you might not, but this is the terms that be created a lot by the Benjamin Graham, the guru of the Warren Buffett. They talk about a lot about the intrinsic value, and then how can you justify the intrinsic value, something like that. So intrinsic value is something the business cash flow, the current value of the future cash flow that the business are earning, and then they are discounting back some complicated financial terms. But you need to understand that analysts, Wall Street analysts will likely to use the interest rates to forecast the company value one. So for example, if the interest rates are higher, they will likely to reduce or forecast the company value become lower. Higher interest rates, the company value will drop one. Why? It's because of interest rate is the opportunity cost compared when you invest in the stock market and then save in the bank. Right. When the interest rates are very high, and you also invest in the stock market, it means that you will miss out the opportunity for you to save money in the bank. For example, bank offering you 10%, but you invest in the US stock market, but you do not put money in the bank. So when you invest in the US equity market, even though you do not gain, and no loss and no profit, 0% of the increment, but you need to understand that you have already lost the opportunity to save money in the bank. So analysts will likely to try to include this kind of opportunity inside, opportunity cost inside in their valuation. So when the higher interest rates, analysts will likely to reduce down the intrinsic value because they want to consider that if you don't invest in the company, you put in the bank, you should be losses lah. If you invest in the company, but you do not put money in the bank, you will be the losses from saving from the bank. Okay, so this is how we understand on it, discounting future cash flow. Something complicated, but yeah, you can also try to Google it. There will be a very good long explanation. It will take some time to explain on it. And then the third thing is, why is the interest rate and then the US equity performance are related? Is because of, so when in a very low interest rate environment, it means that when you save money in your bank, they are not going to offer you a very high deposit return one. So save money in the bank in very professional terms in English is buying bond, buying fixed income from the bank. But simple terms, you just save money in the bank. So when the bank offering you a very low interest rates, of course, we are likely to seek for a better investment, right? Including Forex investment, including the stock investment, stock index investment. Imagine you save money in the bank only pay you 1%, but stock index performance maybe 3 to 4%. Certain people might likely to choose the stock index. So low interest rate environment will likely to reduce the appeal for the people, the desire for the people to save in the bank. So they will likely to remove their money, and then they will shift back towards the US equity market. So I hope I give you guys a brief understanding about how the interest rates will likely to affect the overall US stock index performance. First thing is regarding the borrowing cost. Low interest rate environment means that low borrowing cost. A lot of business will be very easy to expand their business. Second thing is discounting future cash flow. So this is the thing that will be used to calculate the intrinsic value of the company. So normally when interest rates become lower, the analysts will likely to increase the value of the company one. And then substitutions. If low interest rates means that nobody is going to save in the bank because very low deposit return. So they will seek for another good opportunity. Then one of the good opportunity is the US stock index. So when the interest rate are very low, investor will try to invest in other asset classes so they don't save in the bank. So they seek for other asset classes like stock market. Okay, so this is a brief understanding. And then why I'm putting this as a main factor is because in 2024, interest rate is the biggest news for all of the traders around the world. Not only traders like us, it's the global investor focus thing, because interest rates will likely to cause a significant movement. After the Federal Reserve considered increase the rate aggressively previously to combat the inflation, in 2024, economy already showing some sign to slowing down already, especially for inflation rates. So maybe this is the time for the Federal Reserve to change their decisions, shift their monetary policies from the previous rate hike to rate cuts and more aggressively of the cutting. So interest rates, just a simple thing, but this is a thing that's going to affect the global asset classes, especially dollar, gold market, and then US equity market. Okay, so this is the reason why I included interest rates in the slide, and then explaining that interest rate is very important for everyone to focus, because this is a 2024 big trends. Everyone should be able to understand on it. Next thing, yeah, I already made a small, not I lah, I'm according to the CME Fed Watch 2 to trying to make a forecast on it. And then you can notice that recently 98% of the traders are expecting the Fed should be consider cutting their maintain interest rates, but 2% is going to consider cutting the interest rates by 25 basis points. So most of people already expect the Fed should be consider maintain the interest rates. Means that US equity market might be not moving or consolidated. But what is the most important thing is we need to focus on that statement. So even though they make these kind of decisions of do not cut interest rates, but their statement are important. Their statement are very important because they will be also likely to provide a forecast on what is the future expectations of the interest rate. Other factors that are going to affect the US equity market, including the PE ratio, profit growth, investor confidence, and economic growth. PE ratio is something that give you an understanding of whether this equity index is overpricing or lower pricing. So normally all of these US equity index, they do have the PE ratio one. And then this PE ratio, you can try to refer to the Google. And then how can you know whether the US equity index is overpricing or underpricing? You can try to compare the US equity index with other countries, for example, China, for example, Hong Kong, UK stock index, Euro stock index. So when the PE ratio of this US stock index higher compared to others, right, it means that there will be chances for the US equity market to be overprices, too high already the prices. Or if the PE ratio for the US compared to other countries such as Euro, UK, they have a lower PE ratio. So lower PE ratio, all right, what does it mean? Low PE ratio means that US stock index are undervalued compared to others. Okay, PE ratio is one thing that you can focus on it. And then next thing is the profit growth. Very simple. You can just refer to their financial statement. Big company financial statement. For example, if you notice, right, a lot of semiconductor sector, they release a lot of very good financial results. They will be likely to benefit the Nasdaq also. So profit growth, financial statement is one thing that you can focus on it. But you don't have to analyze statement by yourself. Sometimes Bloomberg will show it. Wall Street analysts see that, or currently, for example, the previous news is Netflix. Netflix subscriber outgrowth others competitor. Netflix profit growth aggressively. So this is a thing that you can also find from the news set. Oh, now Netflix is very good. It means that technology sector in the US should be good because Netflix is one good technology company. So Nasdaq should be benefit also. This is also one of the reasons that push Nasdaq to go up. Okay, so you don't have to analyze the company result one by one. Google or the certain analysts are trying to analyze this company result for you. Investor confidence is also one of the good things that we must focus on it. Higher confidence will lead to more people to invest in the US, the stock market. For example, if the stock market do not have any movement, one means that the investor don't have much confidence towards the overall country. So the performance of the stock should be not that good also. But for example, if you can see that US, a lot of investors are really confident towards the US equity market because recently we do have tons of the financial reports that indicating that a lot of companies in the US are performing very, very good. And then you can also notice on the economic data from the US region are also very good. That's why investor confidence towards the US equity market getting higher. So the stock index increased more. But as comparison with China stock index now, you can notice on China, especially HK50, China F50, because as for now, China economy already starts to slowing down. So a lot of investors don't have much confidence. So they sell Chinese stock, especially HK 50. So you can notice the trends compared to HK 50 and then Dow Jones are very, very different. Why is that so? It's because of confidence, economic confidence. So the next thing is the economic growth. High economic growth, people become richer. If people become richer, they will spend more. Spend more, it means that it will benefit the business. The business benefit from it, then a lot of their financial statement will be very, very good. Then it will build up the investor confidence. So in a simple terms is high economic growth of the company will likely to boost up the appeal of the US equity index. So now we are going to try to focus what is the hot topic in 2024. If you want to invest, what is the good sector and or trending things that you can focus on it in 2024. So the first thing, as we mentioned also that regarding the interest rate decisions, interest rates is the main thing in 2024. And then another thing is regarding the sector. Sector, what is the sector? Including the artificial intelligence sector or the technology sector is one of the very, very famous thing in 2024. You can notice on the news recently, just 2024, since the start of 2024, a lot of technology start to build up, and then all of the news trying to release a lot of technology related things. So I do believe that in 2024, technology is one of the biggest trends, and especially after the artificial intelligence things become better and more mature since OpenAI form. And then we do have a lot of autonomous driving car in 2024 is going to launch. So technology and AI is the main thing. Because if you want to launch an autonomous driving car, right, what is the key drive for it? It is AI. So very important. And then the next thing is how can you enhance the ChatGPT in your work for everything or the system of the ChatGPT? How can you enhance it? Same thing is by using the AI. So AI lead to what? Technology sector. So in 2024, technology sector is one crucial thing that you can eye on it because a lot of people are raising billions of the dollar to build the AI and tech things. So you can focus more on this kind of news compared to others, consumer discretionary products compared to others, maybe oil and gas product. I don't think that oil and gas should be very, very hot in 2024 lah, because after the COVID time, I don't believe the traders should be still very interested in the oil. Oil is the previous trend, but as for now, maybe in the next sector should be on the technology. Now we are trying to combine the fundamental as well as technical analysis on certain charts for you to have a better understanding of it. So for example, I've tried to analyze a very short analysis for you on several important US equity index. Like I will try to analyze Dow Jones and then Nasdaq for you guys. So now first charts that we are going to focus on, right, is Nasdaq. So here already show you that overall charts or overall trends for the Nasdaq are increased aggressively. We need to combine fundamental as well as technical insight. Why is Nasdaq become so good recently on fundamental front, right? It's because of a lot of company release a very, very good financial result. And then also, Federal Reserve might be considered to cut the interest rate. This is the main fundamental push that caused the Nasdaq to increase aggressively. So how can we trade on Nasdaq and what is the technical analysis on Nasdaq? So you can notice if we are going to look at the chart, right, Nasdaq already hit all-time high. Certain people will be very, very nervous. When Nasdaq hit all-time high, how can I draw another resistance level according to the previous price? Certain trader will be confusing. They don't know where is the tools for you to draw a next resistance line. So here is the tools. Is what we call the Fibonacci expansion tools. So after you have the Fibonacci expansion, right, you can notice that it will automatically come out with another resistance level and another resistance level. I will trying to teach you how can we draw the Fibonacci expansion level. So yeah, you remove it from MT4 and you click the insert over here, Fibonacci expansion. So you double click on it. You can notice there is a 3 dots one. Okay, 3 dots. So you need to remember the first dot is we need to make sure there is a retracement. Like you can see, overall is bullish trend. But there is a short retracement over here. So here is the place for you to put your first dot. So where is the second dot? The second dot is the highest level around here. So you can see that overall trends for it to continue increase more, then it reached the highest level and then it's dropped back. So this level is where we put the second dot, because the criteria of second dot is you need to make sure there is a retracement after that. For example, right, you cannot pull this line until this line because you don't have any retracement. So you cannot put the second point over there. So you can only put a point in here instead of here. Why? It's because of there is a retracement where you can put the third dot. If you put here, let me show you, yeah. If you put your second dot in here, there is no retracement. You cannot put your third line. So very difficult for you to draw the Fibonacci expansions. So yeah, we click here, first dot, second dot, and then the third dot is the retracement over here after it's hitting all-time high. So after it's coming out, right, you can notice all the resistance level are nicely formed. So according to the Fibonacci expansions, the next resistance level should be on the 18,000 of the resistance. Dow Jones remain the same. So how we draw the Dow Jones, right, is like here. Overall, our trends first stop we put over here, then consider all-time high, then it's drop back, the retracement. So here is how we draw the Fibonacci expansions for the Dow Jones. So now, according to the Fibonacci expansions, next resistance level for the Dow Jones is 39K. So whether the US equity market will be continue perform very good or not in future, we need to continue eye on the Federal Reserve decisions on the interest rates and also the company reports financial results. Okay, so I hope I make a clear analysis on certain product and then you guys really learn something. So yeah, that's it for today's webinar. Thank you so much for your support.